Small business owners with 700 plus credit scores are getting 100,000 plus in funding without business loans or financial statements. But having a 700 plus credit score alone isn't enough. There are other critical requirements that banks look for, and if you're missing any of them, you'll get denied or stuck with $2,000 limits. In this video, I'm breaking down exactly what banks want to see to approve you for 6 figures in 0% funding. The complete requirements for 100K plus approvals. 700 plus credit score with 0 negatives. This means no late payments, no collections, no charge-offs, no bankruptcies. Now, little caveat to the late payments. If you have maybe 1 or 2 late payments that are older than 2 years old, then you should be okay. Anything that's within the last 12 months for sure will cause a denial. If you're in 12 to 24 months and it's maybe 1 late payment on maybe a car loan or something smaller like a department store credit card, then you have a higher likelihood of getting approved. But if you have 6 or 7 late payments, then you need to get those removed. You can get with the credit repair company and they can just delete that entire account. But you really want to pay attention to these late payments because they can be deal killers. And any banks that were attached to any of those derogatory marks, it's going to be tough to get funding from unless you've paid those back. If you do a bankruptcy and you had Chase, Wells Fargo, and US Bank all included in that bankruptcy, good luck getting funding from them. Next is minimum of $15,000 in personal credit card limits. This doesn't mean you can't get a business credit card if you don't have a personal credit card with a $15,000 limit. It just means you're probably not going to reach the 100K mark. Why 15,000? The banks are looking for high limits. They're looking to see that other banks have trusted you with higher limits on personal credit cards, and the longer the better. Now, if you have 3, 4, 5 credit cards and maybe 3 of them have over $10,000 limits, that's great. If you have one that has 20,000 or even 40,000, 50,000, I've seen it, that's even better. Next is each personal credit card needs to be at or below 30% utilization. I'm giving you the best case scenario. Have we gotten people that have a 45% utilization on one card approved? Yes, but in best practices, best case scenario, we like to see each card at or below 30% utilization. Utilization makes up 35% of your entire credit score. So if you've ever paid off a card and then seen your score jump dramatically, this is why. Inquiries only make up 10%, sometimes less, but utilization is such a heavy impact because this shows your ability to manage the money that banks have gotten you. Now, probably 80% of the clients that we talk to have high personal utilization on their cards because they've been using their personal credit to build their business before they ever even found us. We have a solution to this. The first solution is you can pay down your cards out of your own money. Now, if you don't have that money because you've been building your business, we can also get you a personal loan for a decently low interest rate, up to $45,000 usually, and you can use this money to pay down your credit cards, pay them off. If you have money left over, you can fund business accounts or even use it to grow your business. Lastly, you want to have multiple tier 1 personal credit cards. What I mean by tier 1 are large national banks. Chase, Wells Fargo, US Bank, Bank of America. These are all tier 1, accessible all over the country, and they hold much more weight than your local state bank, credit union, department store cards. With these tier 1 cards, these are the cards that you want to have the high limits on. If you have a Chase personal credit card and it has a $10,000 or a $20,000 limit and you want to get a 0% business credit card, they're going to love you. They're going to see that. And if they see Wells Fargo on there too and Bank of America on there too, and you have these tier 1 relationships, this makes you a very, very strong candidate to reach the 6 figures in funding. Department store cards, Apple cards, Amazon cards, they're all great. It doesn't hurt your profile. They just don't hold as much weight. And you also want to have these cards for longer than 2 years. You don't want to just hear this video and then go open up 4 credit cards with each of these banks. Maybe you get high limits and then say, I'm ready for funding. It's too new. Banks don't really take that much of consideration if your card is under 12 months because they don't know what you're going to do. You haven't even been through a whole 12-month cycle yet. So long-lasting relationships with tier 1 national banks. The banks that give you the highest limits are Chase, American Express, and Wells Fargo. And the application sequence matters. I always start with Chase. Not only does Chase Chase give you the highest out of all three of those, but they're also the most inquiry sensitive. If by chance you applied for American Express and then a few days later went to Chase, they're gonna see that, and that can affect your application. If you're applying back to back, you might be able to get by without them seeing the application, but still start with Chase. They do have a 524 rule, which means if you have 5 inquiries in the last 24 months for credit cards, you'll likely get denied. Next, I go to American Express. They care about inquiries. All banks care about inquiries, but they're a little less sensitive than Chase. Chase wants to be the number one. They want you to have everything with them, as do each bank, but not everybody's as strict as Chase is with this. I go to American Express next. I do both of their cards back to back simultaneously, one after another. And then lastly, I'll move on to Wells Fargo. Just remember, with Wells Fargo, you want to have an existing relationship with them. If you don't, they may require you to come into the bank if you don't already have some sort of an account with them. And some common mistakes that can kill approvals are the data points that you put on the applications. They're asking personal income and business income. If you're a new business and you just started and you see business income as one of the boxes to fill on any of these applications and you put 0, what do you think they're going to do? You think they're going to give you a $75,000 card? Probably not. Now, I'm not telling you that you need to lie on these applications. What I'm telling you though is from the banks telling me directly they want to know what your projected revenue will be over the next 12 months. What do you think your business can do? What are other businesses in the industry similar to yours doing? Next is how you name your business. I want you to think logically when it comes to naming your LLC. If you're a real estate investor and you put Bob's Fix and Flip LLC, you're going to be a really high risk business and the likelihood of you getting approved is really low. Now, if you put Bob's Real Estate Consulting, that still fits. Consulting is a very general, broad word that can encompass a lot of different things. You have to know the categories. Real estate is high risk. Anything financial, anything that you could potentially lose the money can be high risk. I like to use words like consulting, marketing, group, things like this that are general and basic tend to do much better in funding. This can encompass almost any type of business. Even if you're a coffee shop and you put Coffee Bean Group or the Coffee Group, maybe you're going to open multiple locations. It still fits. Next, random applications. This means that you just applied for, Truist, maybe you went and got a car loan, maybe you're trying to get a mortgage, or you just applied randomly without any type of system or strategy behind this. We apply for the banks in the order that I gave you back to back. Once your profile is fully optimized and you hit all the key points and you're ready for funding, be prepared to apply for Chase, American Express, Wells Fargo, US Bank, Bank of America, any of the banks that you're going to apply for, one after another, back to back. This will improve your odds tremendously. And if you meet the requirements that I mentioned in this video and you want to know the exact steps to turn this into actual funding, then click the link below.